How to diversify a $1 million gold investment plan. Building long-term wealth isn't just about buying gold and holding it forever. Markets shift, currencies change, and risks appear when you least expect them. Learning how to diversify a $1 million gold investment plan helps protect your capital while giving you room to grow. With the right mix of assets, your portfolio becomes stronger, more stable, and better prepared for the future. Get free Gold IRA guide and learn how to diversify your retirement with gold. Click the link below in the description to get it. 1. Keep gold as the foundation. Gold should remain the core of your strategy because it protects against inflation and economic uncertainty. Split your allocation across physical gold, gold ETFs, or allocated gold accounts. A 40% to 50% allocation keeps gold as your anchor without over-concentrating in a single asset. 2. Add other precious metals. Silver, platinum, and palladium can boost growth and broaden your exposure to global demand. Putting 10% to 15% into these metals adds balance and captures different market opportunities. 3. Include safe fixed income assets. Bonds such as TIPS or high-grade sovereign debt provide steady income and stability. Allocating 15% to 20% helps soften portfolio swings when gold becomes volatile. 4. Invest in resource and gold-related stocks. Mining companies and commodity-focused equities offer growth potential that physical gold can't. Dedicating 10% to 15% here lets you benefit from price cycles and industry expansion. 5. Maintain a cash reserve. Keeping 5% to 10% in cash or short-term instruments gives you flexibility. It allows you to grab opportunities quickly or cover expenses without selling long-term assets. 6. Add non-correlated alternatives. REITs, private credit, or infrastructure funds can deliver income and stability when metals underperform. A 5% to 10% allocation strengthens diversification. 7. Spread investments geographically. Store gold in more than one country or invest in international bonds and companies. This protects you from political or currency risks tied to a single region. 8. Rebalance regularly. As prices move, your allocation can drift. Rebalancing once or twice a year ensures your portfolio stays aligned with your goals and risk tolerance. 9. Track global trends. Monitor interest rates, currency shifts, and metal market conditions so you can adjust your plan with confidence. A $1 million gold investment plan becomes far more powerful when it's diversified. By combining gold with other metals, bonds, equities, cash, alternatives, and global exposure, you build a portfolio that protects your wealth and supports long-term growth. Do you want to learn about how to secure your retirement with gold investment? Download your free Gold IRA guide now. Click the link below in the description to get it. Like and subscribe for more. Thanks for watching.